Hi, folks. Welcome back to Murdy Finance Academy. So, something pretty weird just happened on the Indian stock market. A whole sector that's been, really struggling for a while suddenly just took off. We're talking about textiles. And the question everyone's asking is, well, why? What on earth caused some of these export-heavy textile companies to rocket up by as much as 40% in just a month? I mean, this was not just a little blip on the radar. Just take a look at these numbers. We're seeing gains all the way from 13% up to a massive 40%. Now, for a sector that's been squeezed by high tariffs and all sorts of global drama, a rally like this, it really makes you stop and ask, what's going on? So, that's the big thing we're going to unpack in this explainer. Is this just a temporary bounce, the market getting excited about some good news? Or are we actually seeing the start of a real structural comeback for one of India's most historic industries? Okay, let's get into it. To really understand what's at stake here, we need to do a quick trip back in time. Because, a lot of the answers for today are buried in the past. India's story with textiles goes back literally 5,000 years. And get this, back in 1750, India was the king of the hill, making a quarter of all the textiles in the entire world. But then British rule came and pretty systematically broke that down, turning us into just a supplier of raw cotton. All the high-value stuff got shipped overseas. After independence, well, that's when the long, slow job of rebuilding started. Which brings us to today's big puzzle. India is now the second biggest textile manufacturer on the planet, just behind China. But when it comes to exporting, selling our stuff to the world, we're all the way down at number 6. So what gives? Why is there this huge gap between how much we make and how much we sell? The answer has a lot to do with one of our neighbors. Over the last 20 years or so, while India's been kind of stuck in neutral in a lot of key markets, another country has just completely changed the game. And that country is Bangladesh. Now look at this table. This is fascinating. Back in the year 2000, if you looked at the European Union market, India and Bangladesh had pretty much the same slice of the pie. But fast forward to today, India has barely budged while Bangladesh has grown its share by 4 to 5 times. That is a staggering difference. Let's make this super simple. Think about a basic t-shirt. An Indian company exports it for about $2.90. A company in Bangladesh can sell a similar one for $2.40. Now that 50-cent difference might not sound like a lot, right? But if you're a big global brand buying 1 million t-shirts, that's a $500,000 difference. So how are they doing it? Well, the biggest single reason comes down to this number, negative 9.5%. This has been the massive headwind that India's been fighting against for years. So this disadvantage comes from something called Least Developed Country, or LDC status. Because Bangladesh has this status, they can sell their clothes to the European Union and pay 0 import tax. Nothing. Meanwhile, our Indian exporters get hit with an average tax of 9.5%. So for a buyer, it's a no-brainer. One product is automatically almost 10% cheaper from the start. But this right here is where the entire story might be about to flip. The reason the stock market went crazy is because of news that this huge, long-standing disadvantage could finally get wiped away. The big news is a potential free trade agreement, or FTA, between India and the EU. If this deal gets signed, poof, those tariffs are gone. We're suddenly on a level playing field. And the government is thinking big. I mean, really big. The Commerce Minister, Piyush Goyal, thinks this one deal could take our exports to the EU from $7 billion all the way up to maybe $40 billion. And you can see right here where the biggest wins would be. Most of what we sell are ready-made garments and cotton textiles, the exact things where we go head-to-head with Bangladesh every single day. Getting zero-duty access would be an absolute game-changer for these businesses. But hey, the EU isn't the whole story. The US is actually our biggest market. And while some tariffs have come down, there's this tricky little thing called the US Cotton Clause. It basically lets Bangladesh ship their clothes to the US duty-free as long as they use American cotton. India's paying 18%, so it's kind of the same problem all over again, though the government says it's working on a deal for us too. Okay, so let's imagine we get these amazing trade deals with both the EU and the US. Everything's great, right? Well, not so fast. If you talk to the people actually running these companies, they'll tell you the real war isn't just about tariffs overseas, it's about costs right here at home.
The management at Vardman Textiles, one of the biggest names in the business, they put it really bluntly. They said the main problem isn't the 9.5% tariff in Europe. The main problem is the price of their key ingredient, cotton.
And here's why. Because of India's minimum support price system, which is there to protect our farmers, our domestic cotton prices are just higher than the global price. An Indian mill pays around 78 cents a pound, but their competitors in Bangladesh or Vietnam, they can buy it on the world market for about 72 cents. That 6-cent gap is a cost disadvantage baked in before a single shirt is even made.
So you have this huge opportunity with trade deals on one hand, and this really tough problem with raw material costs on the other. So what's the game plan? How do we actually grab this opportunity?
Well, it looks like the government's strategy has 4 key parts. First, get those FTAs signed and get on a level playing field. Second, do something about the domestic cotton prices so we're competitive from day one. Third, build bigger and better factories like these new mega textile parks to bring everything together. And fourth, start moving beyond just cotton and into the faster-growing areas like man-made and technical textiles.
The ambition behind this whole plan can be summed up in one pretty staggering number: 9 lakh crore rupees.
That is the government's export target for textiles by 2030. It's basically a 3 times jump from where we are right now. If they pull that off, it would truly be a revival of India's status as a global textile powerhouse. Which, of course, brings us back to our big question. The opportunity is definitely here. The global situation is shifting, new trade deals are on the horizon, and the plan is there on paper. But the last part is always the hardest.
Can India actually execute? Can we fix our internal problems and finally turn all this manufacturing power into real export dominance? That is the multi-billion-dollar question that the market is watching so closely right now. What do you guys think? Will the trade deals be enough, or are the domestic issues just too big to overcome? Let me know what you think down in the comments.
If you liked the video, please do like, share, subscribe to Murthy Finance Academy. Thanks for watching.